Good morning, everybody. It's the 2nd of May. We are Sigma Centre back after a long weekend. Hope everybody's doing great. Good morning, Steve. How are you?
Morning, mate. Were you late because you had a busy day yesterday on your birthday?
Yeah, I was. I was all right yesterday.
Was it all right?
Yeah, if it was Sunday or if this was Monday, then it probably wouldn't have been a bit of trouble. But no, I'm all good today.
Celebrated the day before your birthday, so you don't feel so bad on
Yes,
your birthday.
exactly. Yeah, so all good. Let's get into it, shall we? Busy week ahead. So good morning to those watching. If you've got any requests, any markets that you're looking at to start the week or looking to get set for the week ahead, please post those markets up and we'll do our best to cover them when we get to the charts in a moment. But first of all, we're going to do the headlines, and let's take a look first of all at the US core inflation number, which came in marginally lower on Friday. The US PCE prices index increased 0.1% for March, compared with consensus forecasts of 0.3%, with the annual increase declining sharply to 4.2% from 5.1%. We also saw the US ISM index edge higher. That went to 47.1 for April from 46.3 previously, and slightly above the consensus forecast of 46.8. That was out yesterday. Obviously, we were off most of Europe yesterday with the bank holiday. The Fed expectations have hardened. The markets are now even more confident that the Fed will increase interest rates this week, with over a 90% chance of a rate hike priced in. Over the weekend, we've had some concerns with regards to First Republic. The FDIC took control of First Republic Bank as deposit outflows continued. The FDIC then held an auction and announced just after Monday's European Open that the assets had been sold to JP Morgan. Disappointing Chinese data has been seen. The manufacturing PMI index dipped back into contraction at 49.2 from 51.9 the previous month. And the yen also continues to slide as well. It's remained under sustained pressure following last week's Bank of Japan policy decision. The dollar posted 4-month highs against the yen, with the euro at a 15-year high against the yen. We've also seen a surprise move from the Reserve Bank of Australia. They increased interest rates by 25 basis points, taking the overall rate to 3.85%. At the latest policy meeting. The consensus in the market was that the bank was to remain on hold at the last meeting. The forward guidance was conditional, but it stated that further rate hikes may be required. So that's it for the headlines. Let's get into some charts. Steve, do you want to take a look at cryptos for us to kick things off?
Yeah, we'll kick things off with Bitcoin. Share my screen. So, well, what did we do last week? We sort of had a bit of a recovery last week. This week, we've sort of already started to give up the gains. Obviously, this chart runs from a Monday to a Sunday. We see the Sunday night's close. We closed up around about 29,200, and we moved lower. We've lost 1,000 points since then. So we're back under this area of resistance, which seems to be proving a step too far for Bitcoin at the moment. Levels to watch from a intraday perspective would be around about this, where we see this potential for a double, treble top, whatever. There's a small double top here, bigger double top here. Neckline would be down below the 27,000 levels, so really looking for a break below there to see this accelerate downwards. We did a short-term downward trending resistance line, and that seemed to do a job on Sunday afternoon, and price action stalled around there, and also around this wherever this blue line comes from. Not quite sure yet, but it would be like a confluence of resistance areas seem to do cap the upside. So really the 30,000 level as a resistance on the top. If we break above there, then there is potential further upside once we get through that 31,000 level, but then we got 32,500 as well. So looks like we're done for now on the top side. On the downside, 27,000, and below there 26,500 as the support levels. Ethereum Short-term levels to watch on Ethereum, it's doing the same sort of price action. Remember, we got 1730 as the main pivotal point that we've seemed to keep coming across. That's 100 points away. We're trading at 1830 at the moment. We dipped down to, this is last Wednesday. What was the low here? 1787, and we've posted a higher low at 1806, but only just, and I can see this being retested again, and that's quite a key level to hold on to. If you look at the 4-hour chart, we can see the sort of makings of a nice head and shoulders formation. So looks again like this has topped out. XRP levels to watch here. The dip down last Wednesday, we got down to just around 43 and just above there, and rallied higher from there. We've run into some resistance around the Ichimoku cloud. Again, we've got a nice downward trending resistance line, which we can draw in on the 4-hour chart. Got a couple of nice touch points there. That comes in a little bit higher at the moment, around about the 50 level. And yeah, really 43 down to 41 is the support area, and we could see some sort of fireworks if we manage to break that support. So overall, cryptocurrencies under pressure after the rally we had lately. Looking at commodities, let's take a look at gold. We're still in that triangle formation on the 4-hour chart, but what we've done on a weekly chart, really sort of nothing since the week of March 20th of March. We've gone really sideways. We had the little pop up to 2050. That resulted in a doji candle, so a decision. And since then, the lowest we've posted is 1970. And we've traded really listlessly in between. So all very much indecisive, really waiting for that dollar index to sort of make up its mind whether it's going to go up higher from this 102 area, or are we going to have that continuation lower? At the moment, I think we'll ask Joe about it in a minute, but I think Joe's slightly bullish on dollar index. So really, this should result in negative price action for gold. Shorter term, as I said, on the 4-hour chart, got a nice triangle formation that has built up after the sell-off from the 2050 level. Saw some quite aggressive price action yesterday when we moved from 1983. Let's see where the range is. Sorry, 1977 up to 2005, and that was in maybe an hour of a candle, and then reversed sharply lower after that, but stayed within that triangle. And yeah, the support coming in at the moment around about 1978, resistance up at 2005 to 2010. So they're the levels to watch in gold. Crude oil has been under pressure the last couple of weeks, although we did have a rally towards the end of the week after filling that gap from the end of March. And the low last week, 73.85 in WTI crude oil, and we have bounced from there, trading at 75.80 at the moment. On the more short-term price action, still remain in a little bit of a bearish trend. You can see the 4-hour chart doing a little bit of a job here. And we're not far away from retesting that downward trending resistance line at 76. So watch out for that. And Brent crude oil, pretty similar price action. And we'll have quite a little bit of a cleaner trend line. Potential resistance coming in at just above $80. Natural gas still sitting around 235, which is done. We had a bit of a spike up on Friday, got up to 257. Nice little rally there, but gave up those gains pretty quickly. And we still got a little bit of a gap on the charts on this chart between 228 and 224. I'll hand it over to Joe now to take a look at the FX, and I can dive into a couple of indices before we go into Gun to Head.
Okay, lovely. Thank you, Steve. So let's take a look at just some of the major FX markets to start, and then we'll get onto a few of the requests that have been coming in. So dollar index, as we know, been trading in this wedge. We saw a move to the upside. Looked as though it was going to be a pretty powerful one on Friday, but actually we closed back inside the wedge pattern. So we've got a bit of a false start with that one yesterday. On Friday. But yesterday, we saw a decent move to the upside and now looking set to challenge this area of resistance here at 102.23. So if we can break through that, then that could trigger further upside gains in the short term on the dollar index and potentially forming some sort of bottom here in the short term. So yeah, it looks quite interesting on the dollar index, and obviously it's going to have an impact on other currencies. Euro US dollars off to a decent start today, but it is stalling at major resistance here. We can see that there is a bit of rounding off of price action here. We've made a couple of attempts at trying to break through this 110.75 level, but so far failed. Yesterday we had a pretty negative session, so pullbacks could be seen maybe towards the lower end of the longer term bullish channel. So looks as though upside may be limited on this for the time being. Of course, if we do get a break to the upside, that would suggest that dollar is starting to weaken again. And then maybe we'll see a continuation higher towards 112.75 on euro US dollar. Looking at cable, that's higher today as well. Had been trading in a very, very tight range for a period of time. As we can see here, prices just contained within that area. Then we saw the breakout on Friday, bit of a pullback yesterday, a little bit undecided so far today. Are we, as a result of this break last week, going to see a continuation higher towards this next level of resistance at 126.66, or are we going to come back within this range and continue to move sideways for a period of time? A little bit undecided with my thoughts on that at the moment. As mentioned in the commentary, been some really big moves in anything linked to the Japanese yen. Let's take a look at Aussie yen. We can see here 4 consecutive days of huge upward price action, taking out that downtrend in the process, taking out this horizontal resistance at 91.29 and looking pretty strong indeed. As mentioned with euro yen, this is at a 15-year high. So this was trading within a range for a period of time. Had a little bit of a nibble at this last week as a gun to the head trade because it was stalling at this major resistance. But thankfully, I got out of that pretty quickly as it has roared to the upside. A huge upside move on Friday, gapped higher on Monday, and we are continuing to move higher again today. So that's looking very strong indeed. Take a look at sterling yen. That's challenging these highs that we last saw in October last year. So if we can get a close above that today, that would be pretty strong indeed, really. And again, the highest prices we've seen for some considerable period of time. Might have to go back some way here on the chart to find when we were last there. That was back in 2016. So pretty significant moves here again in sterling versus Japanese yen. Let's take a look at some of the other yen currencies while we're here. New Zealand dollar versus Japanese yen. So the New Zealand dollar had been struggling, but it's come alive. Look at these big moves here, and now trying to take out this resistance from back in March this year and doing a pretty good job so far on the session. So it's looking very strong indeed. And if we take finally a look at US dollar versus the Japanese yen, this hadn't been doing an awful lot. You can see it's steadily grinding higher as we'd seen some decent dollar strength of late, but now it's facing this resistance level here from the 9th of March. And if we can overcome that, then maybe what we've got here is some form of bottom pattern on dollar yen, and we can start looking for higher prices over the short to medium term. Okay, so in the comments, there are a couple of markets that have been requested. Let's get to those. Let's start off with dollar CAD. So this has been range bound for a while now. We can see the upper end of the range coming in around 138.27 to around 138.62. Prices in the short term have been moving lower, found some support at this short term uptrend, decent bounce, but the rally has fizzled out into these resistance areas here. So we can see there's a number of key lows between this period here from the 14th of March to the 27th of March. And also from this short term swing move, it's a 61.8% fib level. So prices have rallied into that level, posted a pretty significant rejection on Friday. We made new highs on the session, but then closed very much on the lows of the session. And that is looking under pressure. So in the short term, it looks as though we're on the bearish side of things, and we could see a pullback in the short term towards this kind of area here, and maybe confirm another higher low potentially on dollar CAD. So it looks as though we're in for a bit of a sell-off there in the short term. Next up, going to take a look at sterling Oz. That's down by 1% today, so a pretty big move here. So this, as you can see, played out quite nicely. I had this drawn on for a while ago. We're looking for a breakout from this level, a pullback to this level, which we got, and then a continuation higher. So that all worked out very nicely. But where are we headed now? So last 2 days, pretty negative. We can see here we didn't quite engulf these gains that we made on Friday yesterday, but it's looking a bit negative today. Big move to the downside. Is this potentially forming some sort of short-term correction? At the moment, the overall trend remains pretty bullish. So any pullback could be limited to this kind of region here, where we might find support again. That's at 182.84. The buyers might be willing to step back in at that point and try and push prices higher. So have a look and see if there's any uptrend in place. Just connecting these series of lows here. And yeah, that pretty much lines up with this support area here. So that for me would be a pretty good area to consider going long again on sterling Oz. But in the short term, there could be some opportunities to play the short side into that level. And let's take a look at CAD yen. This is an interesting one. I went through most of the yen currencies, but didn't look at this. But it is interesting. So we've broken out the short-term downtrend. In fact, I'm going to remove that for the time being, just because it's cluttering the picture a bit. But we can see here that this formed a large top back in this period here to December last year. Number of lows in here. So this should act as resistance now. And we can see that there is a retest of this level. We're testing it right now. We have broken through some local resistance at 100.60, but we're into some pretty key areas here. So very interesting to see what sort of reaction we get. Been a very strong move to the upside. So can that be sustained? Difficult to say. So really what I'd be looking to see, are there any sort of forms of reversal candles that are taking shape here? Obviously, if you want to be more granular than this, you can look at these shorter term timeframes, maybe the hourly or the 4-hour, and see if there are any sort of top patterns forming or any reversal candles that are taking shape here to maybe give you that indication that prices are going to stall into that major resistance level. So at the minute, I would say my favored bias would be, well, be very cautious because this is a major area of resistance, but maybe look for a bit more confirmation with some signals in the shorter term timeframes if you're thinking about selling that market today.
Yeah, it looks like a nice double bottom, but really.
Yeah, so if you can get a clean, I mean, well, arguably then if that is the case, we have broken through the neckline there, but we've obviously ran straight into this level, which puts me off a little bit.
Yeah.
Obviously, if this is a double bottom and we are to go with that, then from a measured move perspective, we'd be looking at pretty significant upside over the medium term towards this level here at 107.10. So from a risk reward perspective, maybe buying on a pullback to 100.57, which is the neckline of this double bottom, then that would be your point to get involved and start thinking about long trades.
Yeah, tricky one.
Over
Did
to
you
you,
do
Steve.
Aussie Swiss?
Is that on TradingView, is it?
On our stream, Aussie Swiss. Don't know if you did it.
I didn't. Let's take a look though, shall we?
Yeah.
Downtrend, as we can see here, big channel that's been forming here. But interestingly, the latest touch point that we got on this lower end was at Wednesday. I think I mentioned it then, but we can see here that there was a really nice reversal at that point. We posted a bullish engulfing candle here on the 27th, and then prices have continued to move to the upside. So that looks to be in decent corrective mode at the moment, and maybe looking to move higher in the short term. I'll get rid of those fibs because I'm not sure how relevant they are now. So yeah, looking as though that could be due a bit of a push to the upside. Let's see if there is a shorter term downtrend here that we can maybe target. So potentially for a bit of a wedge formation here. So a break really above these highs here would probably confirm that and give this maybe a little bit of extra upside impetus. So resistance coming in at 60.52 on Aussie Swiss. If we can break above that, get a clean break above it on the daily, then I think that could trigger further gains, possibly towards the upper boundary of this bearish channel, which would be quite a nice move to the upside actually. But just be a bit careful with that. Some interesting signals here. Nice bounce from the lower end of the channel, but I think I'd prefer to wait and see if we can get additional confirmation with a break above 60.52.
Nice one, Joe. Excellent. Well, let's look at indices, because obviously like collapsing banks is great for indices, isn't it? I just can't sort of like understand why we're looking at the heady heights we are when we've got banks collapsing, Joe. Someone has to explain that one to me. What is going on with the world? We had a morning doji star formation a few weeks ago, and this has led to further upside. Last week wasn't so positive. We did sort of like top out at 79.38, just in front of the previous all-time high at 8,045. And yeah, but it sort of like seems that overall, I just don't understand why the markets would be up here. But there are signs of stalling in this rally. We've got a bit of a turnover in the MACD on the daily chart for the FTSE. Nice little top there. But even sort of like Friday's price action is pretty decent, and we're sort of like we're pushing higher today. So someone explain it to me. I just don't understand anymore. On the Germany 40, we've got the all-time high coming in at 16,285. So we're only just over 350 points away from that at the moment. Again, we've seen 3 positive weeks of price action, and we've made a new high. So the highest level we've seen since January 22. That's how far we've come. On the daily chart, similar sort of price action to the FTSE. We've got this MACD turning over, and yeah, we've got support coming in around about this 15,700 area. That's the level to watch on the downside. If we get a break below and a close below there, then I think the downside will really open up. But I keep saying it, and no one's listening. The Dow is running into resistance. That's quite a way off its all-time highs, 37,000, around about 3,000 points short of it. So this level of resistance that or band of resistance that we've got here, formed by multiple highs, is doing a good job at the moment. We've got a bit of a reverse trend line just up above, trading well around about the 34,400 area. Stalled yesterday, a little bit of a reversal yesterday. If we look at the candle, it's a shooting star candle. So if we get downside today, an evening star formation has been formed. So that could tell me that people are looking at these as a stalling area. Daily chart, similar sort of price action in Nasdaq yesterday. It made a new high, but then reversed and closed lower. Although today we've been off to a good start, and S&P managed to sort of like retest this. Well, I'll tell you where we'll put the line there. 4,194 is the top of that. We've got multiple sort of like lower highs in front of that, and the shooting star yesterday topped out of 4,189, trading 20 points below that. So let's see if we can get that reversal today. Yeah, just don't get it, Joe. All this sort of like, you know, we rescue First Republic, JP Morgan, thank you very much, but they still have to deal with the shite show that they've inherited. So you know, and Credit Suisse, the same things happen to that. It just because someone gets rescued doesn't mean all the problems have gone away.
Yeah,
so
it's
yeah,
strange.
it is bizarre. It feels like 2008 all over again. I don't know what the catalyst will be for us to wake up and smell the coffee, but there will be one at some point. It's just about the timing.
Quite possibly. Okay, Steve, let's go on to the gun to the head trades then. So this is where Steve and I pick trade ideas on the stream. As if we had a gun to our head, we come up with ideas on the spot, both with stops and targets, both with risk reward ratios that are better than 2 to 1. We close these ideas out at 9 p.m. UK time unless the stops or the targets are hit. And we are trading with a live account, only a small one, £2,000. And we are risking 1% of that trading capital per trade. So we're going to take a look at a couple of ideas. There have been a couple of requests actually coming, I can see, which maybe we'll come back to after this, Steve, just to finish off. But yeah, last week we looked at oil and I want to say Eurostox 50, I think.
Yeah.
Both of which were stopped out. I think yours was stopped, mine was closed out by the time, but both were offside, sadly.
Yeah.
So let's go again, reload that gun and pick some new ideas for today. Is there anything that's floating your boat so far this morning, Steve?
Well, as I say, indices, I just don't get it. Just do not get it. So I'm going to sell indices. And the only one I can really sell with a little bit more conviction is the Euro 50. Main reason for this, let's run through the time frames. Really decent bearish candle from last week, like a hanging man candle, which engulfed the previous week's price action. So I really like that. Again, hanging man candle from Friday, so I like that as well. This looks a bit like a topping formation, ABC correction, whatever it might be, turning over MACD to the downside. The thing I like about the shorter term candles is we've got a nice little trend line coming down here, which we've failed at this morning, and we're below the Ichimoku cloud, which is always a good sign on a short-term basis. And also the hourly is not far away from being below it. So let's go with this one, Joe. I'm going to get on this little horse here. At least I've got something to go with. I'm going to keep the stop quite tight as well. See if I can get that trade on. Create an order. I know I messed up on one of the trades last week. So let's try not to mess up on this one. So 43 82, targeting 43.15. So that's about a 3-to-1 risk reward. Can I do 0.2, 0.4, 0.3? Risking £19 and 9p. 43.82 stop, targeting 43.15. That looks good. 2.8 to 1. I think I got it on slightly better, did I? Yeah, I think I did. Yeah, so that's me, Joe. I'm on. I think I've done it properly this time.
Let's hope so.
Yeah, let's see how that goes.
Okay, I'm going with indices as well, looking at the CAC 40, the French stock exchange. And it's a similar situation to what Steve just mentioned, actually, with the chart setups. They look quite similar. This is the hourly chart on the CAC, and we can see that there was a head and shoulders top formation that completed on Tuesday last week. We then saw a nice retest into the neckline of that top pattern before then a move to the measured move target of the head and shoulders. So technically that worked out really nicely. Struggling a bit today by the looks of things. A big wide range for the opening bar here today. So I'd like to sell it because I still think that the bias is bearish here. The current price around 74.84. If you can take a look at getting that on for me, Steve. The stop loss I'm going to have is at 75.23.
Yeah.
And the target is at 73.50, so that's a 61.8% extension of the measured move target. So looking for further downside here on the CAC.
Yeah, 73.50 target, 75.23 stop.
Yep, perfect. Okay,
Right,
we're on.
I think I did that right as well, Joe.
Okay, let's check. Looks all right.
Yeah.
Okay, cool. Right, a couple of late requests coming in from Lompra, so let's get to those. Just back to FX then, just to take a look at a quick couple of charts. So we're going to look at Euro Oz and Euro New Zealand dollar. So let's do that, shall we? Euro Oz. Let's get the daily up. So with the daily here, we can see that there was a decent break to the upside. There was a significant area of resistance here that goes all the way back to August 2021. So we burst through that on Monday last week, and then prices continued higher, coming up just shy of the next level of resistance, which is this previous high from October 2020. Now we've seen a pretty tasty pullback in the last few sessions, an engulfing candle that was formed yesterday and further decline today, but it's into what should be newly formed support. So it'll be interesting to see if the buyers take this opportunity to buy back in following the strong move that we had to the upside. So maybe into this area here, it could be a good argument for going long. Obviously, prices can overshoot. They don't necessarily strictly hold these levels. It's just, something that we hope happens as technical analysts, but not always the case. So, do have a stop loss, because obviously if the selling does pick up steam, it may be that it actually corrects all the way back to the longer term uptrend channel. But technically, we should or may find some support in around this region, so it could be a good opportunity to buy. And with Euro New Zealand dollar, that was the other one, wasn't it? Yeah, Euro New Zealand dollar. So prices have been trending really nicely high within a bullish channel. We then saw a break to the upside of that. So a bit of exuberance there with regards to this pair. Finally topping out at around 80.70. We've then seen a corrective move lower. So where is the support? So we've got a 50% fib level, which we've gone straight through. Now we're looking for a retest of some sort of form of support, which maybe not, maybe down at this level here, which is at 75.32. That's really the only kind of horizontal line that I can provide as a relevant area of support. And we can see it was previous resistance here, so potentially that should now act as support. We also have a short-term uptrend line, so maybe we're in corrective mode. We could be pulling back into this region here, at which point for me it would be a pretty viable buy idea, because the trend remains bullish and we've had a nice pullback to test newly formed support. So potentially, well, in corrective mode at the minute, but potentially waiting in the wings for opportunities to buy with those two. Okay, let's move on to the day ahead, because there's a few bits out this week that we need to be aware of. So Eurozone consumer prices out at 10 o'clock today. That's just an hour and a half away or so. We've also got US JOLTS job openings, which is due out at 3 p.m. today. And then for the rest of the week, it gets pretty hot with economic data. So we've got the Federal Reserve policy decision tomorrow. As mentioned, there's a 90% chance now that they are going to hike interest rates, swiftly followed by the ECB policy decision on Thursday. And then we've got the non-farm payroll numbers on Friday, as well as the Canadian payment employment details as well. So yeah, lots happening this week. Promises to be an interesting one. And obviously we've got some other situations ongoing with regards to banks failing as well, which is never good. So let's see what the rest of the week brings.
Yep, brilliant, Joe. Cheers.
Okay, great. Have a fantastic day, everybody. Welcome back. Have a great week ahead, and we will see everybody again tomorrow morning.
Cheers.
Bye-bye.